This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, August 18th, 2015. Euro dollar. So the euro is stalled out right now by the 61.8% fib retracements off of the May high to July low move, though the market could still be in the throes of a correction, which could take this market beyond 112.15 and into the 113s further up. Overall, though, the downtrend remains firmly intact on a medium-term basis, and a lower top is sought out somewhere between current levels and the 11300 in favor of the next downside extension below 108.10 and towards the multi-year low that we saw in March at 104.62. Ultimately, with this market, only a break back above the high that we saw on the 15th of May, which comes in around 14.67, would compromise the immediate bearish outlook. Sterling dollar. So cable has been well capped in rallies towards the 157 area, with 156.90 capping thus far, though the market does retain a constructive outlook on a medium-term basis after being very well supported over the past several months and looking like it could potentially be putting in a higher low at 53.50 ahead of the next upside extension beyond that 2015 peak at 159.30 from June. But we would need to see a break above 156.90 to confirm and strengthen this outlook for a fresh upside. Ultimately, though, only back below 53.50 would take the pressure off the top side. Dollar yen. So dollar yen continues to be locked within a well-defined uptrend, though the market has stalled out in recent trade ahead of 125.85, that previous multi-year peak that we saw back in June, with rallies above 125 being well capped. Monthly studies are technically overbought here, so there is risk for additional consolidation and correction before the market looks for a more meaningful bullish resumption. A break back below 123 would confirm the onset of a more significant correction and accelerate declines back towards the 121.30 critical low from the 8th of July. Euro Swiss. So Euro Swiss is now in a very constructive outlook for this market after breaking out above some critical multi-day resistance at 105.75. At this point, the market is stalled out at 109.62, though a higher low is now sought up ahead of the next upside extension above 109.62 and through critical psychological barriers at 110 further up. At this point, any setback should be very well supported by previous resistance now turned support at 106.90. Aussie dollar. So Aussie put in a fresh multi-year low, a 6-year low last week at 72.15, though the market has mostly been very well supported and trading within a consolidation over the past several days. Look for a break back above 74.40 to open the door for a more significant upside correction towards the 7700 area, while back below 72.15 would open the door for fresh downside towards the 70 area, that critical psychological barrier at 70. Dollar CAD. So dollar CAD has recently put in a fresh 11-year high at 132.15, though the market has since been correcting lower and could be putting in a lower top now at that high that we saw on Monday at 131.52 ahead of the next downside extension below recent support at 128.60. Ultimately, the uptrend remains firmly intact, though we are seeing a bit of a correction that could play out over the coming sessions. Look for any setbacks to be very well supported ahead of 126, with a medium-term higher low sought out ahead of an eventual break back above 132.15 and towards the 135 area further up. Kiwi dollar. So Kiwi has been comfortable consolidating off fresh multi-year lows that we saw last week at 64.70. The market has basically been consolidating just over 65 for the past several days, and right now we need to see a break below 64.70 or daily close below 64.70 to open the door for the next major downside extension towards psychological barriers at 60. At this point, though, if we do see a break back above 67.40, this will open the door for a more significant correction, potentially towards the 70 area, before the market looks for the next meaningful medium-term lower top. SPX 500. So the S&P 500 continues to chop around, but is showing signs of a major top back in May at that record high in May at 2137, though the market will now need to take out that critical, elusive March low at 2040 to confirm the topping structure and accelerate declines. Gold. So gold is locked within a downtrend right now, though the market has done a good job of recovering back above 1100 and away from those recent multi-year lows that were set down in the 1070s several days back. At this point, though, while the market holds below 1142, that's the previous 2015 base, the immediate pressure remains on the downside for fresh setbacks below 1073 and towards critical psychological barriers at 1000 further down. If the market, however, can break back above and close above 1142, this will take the immediate pressure off the downside.